I grew up on the North Shore, went to University of Illinois, went to the University of Chicago, and worked for 13 years as an economist and a financial markets policy analyst for the Federal Reserve. And I recently, about a year ago, started working with Truth in Accounting, a nonprofit started in 2002 by Sheila Weinberg, a very hard-working woman who was concerned about federal government finances. And someone tugged her at the elbow and said, you should be looking at the state of Illinois if you're interested in bad finances. And she did. And one thing that she has done is, along with Sean Cruz, one of her fellow workers and mine, put together a heroic amount of work putting together one of the basic problems with state government finances and local government finances is the fact that a lot of the debt is not on the balance sheet. It's been pushed off the balance sheet into the footnotes, into these actuarial reports, and not really being reflected on the balance sheet. We don't really know on the balance sheet how much we owe. The amount we owe in Illinois, as well as in the United States government, is far in excess of what they're reporting to us in the amount of debt that we have incurred. So what we're going to do today is look at Wauconda and Illinois, and we'll also take a peek at Chicago in some interesting ways that I hope you'll appreciate. Bottom line, I'm a sucker for nice lakes because I grew up on Lake Michigan. I taught sailing for about 6 summers. Had a good time doing that. And just, well, how deep is the water is the question. And bottom line, the city of Chicago and the state of Illinois are facing very deep Lake Michigan depth sort of issues. Wauconda, it's also underwater, but it's not nearly on a per-person basis or per taxpayer basis. It's not that dramatic. But everybody who lives in Wauconda also lives in the state of Illinois, as well as the United States. And that's where the problems are really centered. But they're also in Wauconda, they're just not as big. Truth in Accounting started by Sheila Weinberg in 2002. What's our goal here at Truth in Accounting? We try to promote truthful, timely, and transparent government financial reporting. That's what we care about. And we are concerned that oftentimes our government is not telling the truth through the financial reports at federal, state, and local levels. Why is this important? Well, here's a quote from Thomas Jefferson, a very old quote. It's an informed electorate is the basis of a sound democracy. And the bottom line is, how do you vote in an informed way if you're not really being told the truth about your finances? And that's what we're trying to promote, is a more truthful financial reporting structure for the United States, and as well as state and local governments. That this stuff is rooted, importantly, in the U.S. Constitution, which Article 1, Section 9 includes a clause, no money shall be drawn from the Treasury, but in consequence of appropriations made by law, and a regular statement and account of the receipts and expenditures of all public money shall be published from time to time. That's the basic constitutional provision in the United States Constitution underlying federal financial reporting. And there's a very interesting fellow I've gotten to know who's the CEO of an investment firm in New York named Joseph Marin, who's developed looks like a sound argument that in fact our U.S. government financial reporting is so bad that it violates, it's not constitutional. This is not a constitutional scheme that we have for reporting the finances to the public. Among other, the word all is in there, all public money. One of Joseph Marin's arguments is that, wait a minute, we have this consolidated balance sheet for the federal government, but there's some things that are off of that, including the Federal Reserve and the Federal Reserve banks, Fannie Mae, Freddie Mac, and all these other organizations that are not included on the consolidated federal financial statement, and therefore it's not reporting all public money on a regular statement and account. Just thinking basically, we're talking about financial reporting. What is public finance? And there's 2 main types of financial decisions everywhere, including private sector and public sector. Getting money in the door, or financing, and putting it to work, or investment. And for governments, in terms of getting money in the door, 2 main ways. There are others, but the 2 main ways are debt and taxes. You can tax, or if that gets too painful, you borrow money and put off. But at the same time, does that mean you're not taxing if you're borrowing? And debt really, in a way, is equal to taxes. You're just pushing it down the road. You're taxing future people by borrowing, because it has to be paid back at some point. Because this ability to postpone the day of reckoning exists, we've developed in state and local governments, as well as purportedly sometimes at the federal level, balanced budget requirements. which constrain, in theory, the ability of politicians to spend more money than they take in, and thereby raise the debt level. So in Illinois, as well as the city of Chicago, there's a balanced budget requirement. But it depends on how you count. Here's a question. If you had to raise your credit card debt in order to pay your current bills, do you feel like your budget is balanced? Does that feel like a balanced budget? No, you're borrowing in order to plug the hole. Let's say you hire somebody to do some work around your house, but you don't have the money to pay the bill, and you promise to pay them next week. Is that a balanced budget? And the third question, if a government has to take out loans to pay its current bills, do you think it's balanced, its budget is balanced? But the way the law is written and interpreted in Illinois today, all three of those mechanisms are ways in which they can get money in the door and count that as, quote, revenue, even though, effectively you and I as individuals wouldn't feel like our budget is balanced. But that's what our government is doing. And then it claims to be balancing the budget every year, which is, well, an SEC commissioner had some very strong words for state and local government municipalities and their accounting and financial reporting yesterday in the news. And he used the word fraud in describing this problem. And had some very strong words that appear to be suggesting that the SEC is going to be getting much more active in pursuing municipalities for the financial reporting and management of budgets, at least in terms of how they're being reported to investors and the public. And that's going to be an interesting thing to watch in the next few years. Illinois had $5 billion of debt reported in 1984. Since that time, the state's had a balanced budget requirement. How much debt should it have today if it's balanced its budget every year since 1984? Shouldn't have more than $5 billion. But what does it have? And the way we're going to talk a little bit about how truth in accounting looks at the world, but in taking out capital assets and the debt related to capital assets, and looking at the assets that are available to pay bills versus what those bills are, including the off-balance sheet debt, the shortfall is north of, or close to $170 billion right now in the state of Illinois. It's a massive number. We are in a hole, and one of the worst holes in the nation. Now, New Jersey, Connecticut, Rhode Island, but Illinois is up there, and California. But we are in a financial difficulty in Illinois. It's going to be hard to get out. Here's the provision in the Illinois Constitution that relates to this balanced budget idea. It's called a balanced budget provision, even though the word balance doesn't appear in the wording. Article 8, Section 2 of the 1970 Constitution requires the General Assembly to make appropriations for all, quote, expenditures of public funds, with appropriations for a fiscal year not exceeding the, quote, funds estimated by the General Assembly to be available for the fiscal year. But if you can count the anticipated borrowing proceeds as funds estimated to be available, that's a way to balance your budget, at least, and be consistent with the Constitution in Illinois. Unfortunately, it's not really balancing the budget. You're borrowing and pushing the problem down the road. Here's a quick peek at Illinois versus its neighbors on, at least on the reported financial statements and the income statement, which is called the statement of activities in the local government world, in the state and local government world. The statement of activities includes numbers for the money you take in and the money you spend out. With the money comes in the form of general revenues and taxes, as well as fees and grants that are being charged and given to the state. And so that's money coming in, but the governments also have money going out in the form of wages and salaries, and effectively the expenditures too that should be accrued for the accumulating obligations in pension promises. We'll get to that in a minute. But here's, at least according to the reported data, since 2005, for this period, Illinois, granted, we went into one of the worst economic recessions since the Great Depression. It's been a difficult environment financially for the governments. However, it was difficult in Michigan and Indiana too, and clearly Illinois had a persistent overspending of the money that was coming in, building up its debt level relative to its neighbors in the Midwest. In turn, this is our measure, and we'll talk a little bit about how it's constructed, of something called taxpayer burden. Getting all that stuff that's off the balance sheet, putting it on the balance sheet, and deciding how big that is relative to the assets available to pay bills. That's our taxpayer burden. And in Illinois has, I think, the second highest taxpayer burden according to our estimates right now in the whole United States. And that's Illinois versus its neighbors on this metric. Have you ever heard the saying in economics, correlation is not causation? Well, here's a correlation that may or may not be causation. Coincidentally, this is a survey, the United Van Lines is a migration or a big moving company with interstate moves. And this is the share of inbound and outbound moves, the net outbound shipment percentage for Illinois versus its neighbors. Illinois had the second highest in the nation number of people, or the share of the outbound moves that were outbound in total shipments, according to United Van Lines. People are leaving the state. Coincidentally with the problems that we're having, not just in terms of the prospects of future taxes that are out there, but the quality of government services has taken a hit. In addition, because of our financing, you can see that in a few things. For instance, there are surveys of nonprofits that contract with the governments in order to provide social services to poor people. And the Urban Institute recently came out with their second results from a study that showed that the states, they had a percentage of nonprofits reporting a big problem with late payments from the state in order to be able to provide the services that the nonprofit is providing. Illinois was #1 in the nation by far in terms of the number of people reporting that they were getting slow payments from the state. And in turn, they can't provide the services like they could be able to if the Illinois was. So here's one more. Remember in terms of that balanced budget, that net revenue idea that I brought up? This is the frequency of real balanced budgets and putting all 50 states into 8 buckets. There's one state in that bucket #1 that only did it once in the last 8 years, only really balanced their budget once. And there's one state in that bucket #2, that's New Jersey. And then there's and then in turn, all those, you can see that the more often you really balance your budget, the more likely it is that you have a lower taxpayer burden or lower debt level. And Illinois is the one that's in bucket #1 in that chart. Illinois is not only in bad shape financially, but they take time to tell you. We believe in truthful, timely, and transparent financial reporting and truth in accounting. Illinois is one of the slowest states in the nation in releasing its annual financial report. It takes almost a year, historically, for the state to develop and produce an audited financial statement for the state government. It's getting better in recent years, though. All right, let's take a look quick at 3 cities in the Midwest. Here's Indianapolis. Remember that net revenue measure? And you can see the hit that Indianapolis took in 2009, which was one of the worst years economically since the Great Depression. It's not necessarily evil that they had a problem. They're struggling to recover. They haven't gotten back to that balanced budget level yet. Now, let's compare Indianapolis to Detroit. Let's see what, Detroit has just entered bankruptcy. And so let's take a peek at that difference. And Indianapolis looks a little better by comparison compared to Detroit, which makes some sense. But Detroit is in dire straits and in bankruptcy court as we speak. Detroit couldn't look better than Chicago, could it?
Oh, goodness.
Chicago's the number on the bottom. And that's the city that tells you that they balance their budget every year, as required by state law. How does this happen? And the amount of debt, in turn, over that period, here's Chicago's total reported debt on their comprehensive annual financial report, rising rapidly in the last 8 years. That's just the reported debt. The off-balance sheet debt is equal to or greater than the reported debt because of the pensions and the post-retirement health care benefits that they have. One thing that's very interesting and or scary about that situation, rising debt equals rising interest expense, and that's a huge increase during a period when interest rates are falling, which should be helpful for you. And yet, even so, Chicago is incurring a great deal of interest expense, despite the fact that, we're having declining interest rates. All right, with that bleak background, let's look at Wauconda. I'm using some of these same metrics. How does Wauconda look? Basically, it only truly, quote, balanced its budget in 4 of the last 9 years. Having said that, that negative line there is, below zero line there is not that big, especially even on a per resident basis. It's not a dramatic shortfall, but it is a practice. You know, you would like to see them producing a little more revenue each year than they're spending in order to bolster the financial condition of the village, and it's not happening. Lake County is in, you know, the Lake County government entity is in much better shape, although that is having more stress. And in turn, you know, here we are in Wauconda and Lake County, which are part of Illinois. And we are seeing outmigration, even from Lake County, rapidly growing historically. Lake County, we're seeing outmigration from the Chicagoland area at large, in part because of this financial difficulty. Here's Wauconda's long-term debt. So this is bonded debt obligations, which is going from a very small number, around $2.5 million, rising significantly, or over 10 times by 2013. They're getting more money in the door by borrowing it long-term, which may or may not be. Sorry, go ahead.
Lake Michigan Water.
Yep. Okay. One of the problems when you do that, you have these long-term debt obligations. They're long-term until they aren't. That stuff becomes due at some point. And the current portion of long-term debt, which can be a source of stress financially, is rising faster in Wauconda than the long-term debt. Those bills are coming due sooner and sooner, and that's going to be a source of stress perhaps in coming years. And what we're talking about here is just the reported debt. Here's a look at the unfunded pension promises in the police fund and the IMRF fund. And you can see a large and rapidly growing number here, especially in recent years, which I think other people here maybe know more about than I do. Apparently there were some sweeteners or something in the contracts for the police, not just in Wauconda, but because of state law and state mandates, that in turn were hard to fund. And the unfunded pension promises, hopefully you fund these things, but they're woefully underfunded in Illinois, in Chicago, and perhaps even in Wauconda. At the bottom line, here's an introduction to how we look financially at government and government finances. We take a look at the bills the village has accumulated, the bonds that are out there now, at least in the latest financial report, of $23.3 million. There's other liabilities of $12.2 million. We take out the debt related to capital assets because we also take out the capital assets on the other side of the equation in terms of what's available to pay your bills. So we take out the debt related to capital assets. We add those unfunded pension benefits and the retiree health care benefits and come up with a total number of bills currently facing the village of $23.3 million. But here's what the village has. $115 million of assets. We take out those capital assets, we take out restricted assets, and we have assets available to pay bills of $21.8 million. $21.8 million is less than $25.3 million. Therefore, there's a burden on the village, facing the village, in order to meet its bills. And on a per taxpayer basis, for all the individual income tax filers in Wauconda, that comes to about $700 per person. So if every individual income tax filer in Wauconda sent a check to the village for $700 today, you'd be even, which compared to other localities and the city of Chicago is not that much. So it's not that onerous right now. That's how we see it. And I've got a two-pager that Sheila prepared for you over the last couple of days, Sheila Weinberg. And I'll hand this out. This is a closer look at Wauconda along those lines in that framework. So Nick was talking about what else you can do. We have some ideas. We like something we've developed, or at least Sheila developed historically, called fact-based budgeting, or full accrual calculations and techniques. Full accrual of costs, and implementing that, perhaps even in your village. One of the things that the state and local governments can point to and say, I'm not maybe responsible for this, because they have to produce reports consistent with, quote, generally accepted accounting principles, which are given to them by the Governmental Accounting Standards Board. And it's these principals themselves that have been responsible for hiding so much debt in the government. So, in a sense, they can wash their hands of the problem in local villages and say, no, I have to follow those. On the other hand, they can go above and beyond and actually tell the truth to their citizens, in addition to these formally required reports that have been so biased and really almost fraudulent for so long. And in fact, the Governmental Accounting Standards Board has decided to change its reporting requirements, and they're going to start, you're going to see bigger numbers in the next year's financial reports when they come out in a year and a half or 2 years. You're going to see much bigger debt levels in your state's balance and in your village's balance sheet, because they're going to recognize those unfunded pension promises. They're going to go onto the balance sheet, and the real closer number, when it arrives for Illinois and Chicago, it's going to be, and people are becoming aware of that now.
Can I ask a quick question?
Sure, sure.
So we've gone without a finance director for a year, and they're outsourcing all the accounting. As they hire a finance director, can they decide to implement, can they decide that this person has to use this accrual technique?
You know, you could. You could develop reports. In addition to those formally mandated or required reports, you could develop, no, we're going to put together a financial statement according to these techniques. And
are there accountants out there that you could make that a hiring stipulation? Are you familiar with how to do it this way?
Hiring stipulation, you mean, for?
As we hire a new finance director,
Uh-huh.
Are there accountants who are more savvy about this kind of accounting? Or does it?
Yes, there are. And Sheila can refer you to those people.
So maybe that would be a good resource for our board members.
Sheila can come and give a talk and bring some people if you're interested.
I think it'd be interesting.
What else can we do? I guess final.
Yeah.
In general, not just in Wauconda, but in the United States. It's unfortunate we have as untruthful reporting as we do and demand the truth. Thank you very much for listening.
Thanks, Bill.
Thank you so much, Bill. I'm sorry I didn't get to speak with you, but it was definitely, and it's definitely going to reach our, I think it'll definitely be reaching our people.